There, this is Skye Leber with Epique Realty, and we have the fabulous.
Hi, I'm Elise Paolini with Movement Mortgage. I'm excited to help Skye talk to you a little bit about some financing.
Yeah, so Elise, tell us a little bit about yourself, your background, how you got into the mortgage industry.
Yes, so I went to Rollins College in Winter Park, Florida, and I was a finance and business major. I had a marketing, a little bit of a minor, but really focusing on finance and business. And my mom has been a lender in Florida for about 12 years now. And I was really fascinated by the real estate industry and obviously finance. So it kind of went hand in hand. And I really grew a love for helping first-time home buyers specifically, but also, all participants buy homes and get involved in the community. So that's kind of how I fell into it.
That's awesome. And then, so questions that you think that anyone that's purchasing a home, what are they looking for in a lender? What questions should they ask in a lender, and kind of go from there?
Yeah, I think, like Skye can attest, finding a lender that works in unison and partnership with your realtor is definitely a game changer. I think that finding an advocate for you, and by advocate, I mean someone that can help you negotiate, help find creative solutions, because not all financing and all purchases are straightforward. So I think, not finding someone that's only going to use a cookie cutter, one size fits all approach towards purchasing is definitely helpful for first-time home buyers. I think finding someone who's able to spend a little bit extra time walking you through what are these disclosures, what is the interest rate, what are we really looking at? Being available at all different hours, I think is definitely important. But finding someone that you can talk to and ask the questions and that you feel comfortable, okay, slow down, I don't understand. Can we revisit this? I know you already explained it, but I have some more questions. Finding someone that will slow down, take a little bit of a warmer approach, I think is helpful for first-time home buyers and new investors for sure.
Absolutely. You do a lot of hand holding. I know that for sure.
Yes, yes, but I'm happy to do it. It's a confusing world when you've never done it, like all things. So I think
Absolutely.
having someone that can walk you through your first time so that you're ready for the second, third, as you continue on in your time and investment in real estate is important.
And there's so many things to know about the mortgage industry in general, I think that are
Yes.
confusing to anyone, really, when you're
Yes,
buying your
yes.
first, second, third,
Seasoned,
fourth house.
yes.
Yeah.
Seasoned veteran investors and purchasers all have questions still. So all questions are welcome, but again, finding someone that can hold your hand, like Skye said, and make sure that you have a full understanding of what you're doing before you finish the purchase is important.
Yeah. And I know people are looking at like, what can I actually afford? How do you figure out what someone can afford? What makes sense for them? How do you figure all that out? I know there's a lot of
Yeah.
mortgage calculators online, but is that really how you should
A
go about it?
mortgage, yeah, that's a good question. A mortgage calculator is okay. It's a fine tool. It's kind of a plug and play. But what I always recommend is before you go shopping, get with a lender and find out for your specific financial profile, what can you afford? Because I think sometimes with big box lenders, they say, yep, you're approved for X, Y, and Z. Go ahead, go shop. But they don't find out your goals and they don't find out how much you're comfortable spending. Just because you can qualify for it doesn't mean that you want to. So I think, a lot of the good questions are, what is my financial profile? What are you looking at? So credit scores are important, income's important, assets and debt and liabilities. So, we're in college, we have student loans. A lot of, there's a misconception that the entirety of your student loans are being used against you for your debt to income ratio, but really it's only the monthly payment. So I think finding, the right formula and the right ratios for you is important in that mortgage calculation to figure out how much is your debt to income. So that's your total monthly debts divided by your total monthly income with the projected mortgage. So the mortgage calculator can help kind of figure out for the house payment what makes sense, but it's not necessarily accurate because it's not taking in to account your specific profile.
Sure. And
It's
then
very
for college
roundabout.
students, no, you're good. You're good.
Yeah.
For college students, like just coming out of college, do they need to be in their career for 6 months, a year? What's the ideal scenario? Like they know they want to live in North Carolina per se. Like
Sure.
they know they're making 60,000 a year just getting out of college. They've got
Sure.
a small amount of debt for student loans.
Yep.
How do they go about doing that with you?
Yeah, that's a good question. So salaried employees, we can work with a offer letter. So, sometimes they'll
Wow.
collect one pay stub after closing, But as long as you have a salaried letter saying, yep, Jimmy is going to be paid $60,000 effective July 1st, that's fine. We can issue a pre-approval based on that. For variable income, so employees that are hourly, typically we need at minimum a 1 year history. That said, that's kind of when we start to introduce non-occupant co-borrowers. So sometimes, first, just coming out of college, if there's someone that's able to apply with you on the mortgage, they can use their income to help. And then after 1 year, the mortgage that they're not being tied to by living in it, they can exclude from their debt to income after a year of payments being made by the occupant borrower. So there's some
Okay.
ways, again, these are some creative solutions, but really salaried is anytime. We really need 1 year for a variable, typically two, but you can get around it with one.
Okay. And what about buying flips or fixer uppers or duplexes? Talk a little bit about that.
Yes, a kind of first time home buyer hack that we like to use and advertise. We're in Florida, but it's applicable everywhere, is using the FHA 3.5% first time home buyer approach, but with a duplex. So for first time home buyers with an FHA loan, regardless of duplex or any type of, residence, you can put as little as 3.5% down. But with a duplex, what is kind of fun is if you're planning on living on one side of it, you can use the projected rent from the other side to help one, offset your mortgage, but two, help you qualify. So if you get a lease agreement saying, okay, yep, we can get $1,800, $1,500, $1,200 for this unit, then you can use that as income to help you qualify. So you're not
That's
only
pretty
getting to take
amazing.
it. It is amazing. And so you're not only getting to take
Yeah.
advantage of the low down payment, but then you're also getting to add income to your profile.
Right. That's amazing. Yeah, I
Yes.
love that.
Yes. And again, for FHA, they can get at up to 6% seller concessions to help with the closing costs. So, there's a lot of avenues to take advantage of for the FHA
Absolutely.
3.5%. But that's a cool little investment. Again, if you could take
Yeah.
advantage of if you want to live in it and then, make enough income, renovate, and then move to the next house, then just turn that into investment property. And then you have double the income helping you qualify for the next property.
And what about veterans? Do you do a lot of veteran loans?
We do. Movement mortgage is wonderful for veterans. They can put as little as 0% down. There's a lot of perks for the VA loans.
Okay.
But
And
yes, we
can you just
definitely.
talk quickly about some other loan types that you offer?
Yes, so we have also, a vast range as, conventional, which is kind of your basic, which there's a misconception with conventional loans. You can put 5% down. You don't necessarily have to have 20%. But we also have things like down payment assistance. So that's really credit scores have to be around 620 to 640. And it's state specific, so there's all different programs, but that helps. Say you only have, the 3.5% down payment. Can we get some down payment assistance to cover the closing costs? So, we can do anything from jumbos to down payment assistance. There's all sorts of different programs. And that's why getting
That's
with a lender that is knowledgeable and has, creative solutions included in that is figuring out, okay, for your specific scenario and your goals, short term and long term, what programs can we take advantage of that are in our arsenal?
absolutely. And then what would you say about different lending, mortgage lenders, like as far as like companies and going online and Googling different companies, are they all created equal? What are your thoughts on
Yes.
that?
I think similar to, realtors that you can attest to, it's not all entities are created equal. I think that you have to find someone with, the time and energy to walk you through it. And, there's a lot of advertisements like, oh, we're offering 5%. You know,
Yeah.
they might, but they might charge you for it. So there's some false advertising. There's, some banks run 9 to 5. You won't get a hold of anybody from 9 to 5. Some smaller banks like Movement, although national, the loan officers like I'm available whenever. Real estate works at all hours. So I think that, just finding a lender like a real estate agent with a tailored approach, that's willing to go above and beyond because not all banks are created equal. Um, but again, there's good, bad, and
Yeah.
everything in between. So.
Yeah, for sure. And then what about co-borrowers? You'd mentioned that earlier. Tell us a little bit more about like getting a co-borrower. How does that work? When do
Sure.
you need them? Who
Yeah.
would that be applicable to?
Usually, when I go through the co-borrower process, what I like to do is explore all avenues with only the occupant borrower first. So, the individuals that are planning on living in the home, let's see if we can get you qualified, whether we need down payment assistance or not. And then, if we can't, then let's discuss our options for co-borrowers. So they can be both non-occupant and occupant, but for non-occupant co-borrowers, they apply in a very similar manner to someone living in the home. They would fill out the application and we would take, all the same information for their financial profile. But what you're able to do is then utilize their assets, their income. Although their debts are tied to it, oftentimes you're only adding someone that would be beneficial. So we'll look at their application and make sure that their income both offsets your debt and their debt. And adds positives to the file. But like I mentioned briefly earlier, there's some hesitancy sometimes to be a non-occupant co-borrower because they don't want the mortgage that they're not living with to affect their debt to income ratio in the future. But an interesting fact on that is that after 12 months, if you can show history of someone else making the mortgage payment, they can write that off of their debt to income. That
Okay.
can
And
be
that person
excluded.
comes off the loan altogether.
Well, they won't come off of the loan. They'll still be on it, but then they don't have to use it in their debt to income ratios. Then you
Okay.
can always refinance and get them off. So it's not permanent necessarily.
Sure.
So say it's a temporary solution just to get you in the house, then you can always refinance, say when the market changes, or, we want to refinance and lower the principal a little bit. There's different reasons why you would go about refinancing. And even if it's just to get someone off, then say we're going from variable income to salaried position, and we want to take now because we can qualify on our own the non-occupant co-borrower off, then we just refinance.
Okay.
And I
Perfect.
know movement, and like a lot of banks will do this. If you have your original loan with movement, some of the fees get waived to refinance. So there's
Okay.
some savings for using the same bank.
That's wonderful.
Yeah.
Awesome. Any other words of advice for anyone that's looking to maybe purchase in the next year or so?
Yeah, I would say it can't hurt to ask. And if you're a year out, I have a lot of clients that come and they're saying, I don't want to purchase right now, but how am I looking and where am I going? So, okay, this is the income that I'm working with now. If I stay here and nothing changes, what can I qualify for? And then it just gives you an idea of, okay, if my goal is a year's out, is there anything that I can do to get there or to change the course of where I'm going, or am I happy? And we just want to keep the same income and we just want to show history. So it doesn't hurt to ask in advance and it just prepares you to make the purchase. So I always say, ask early and get your questions answered while you have time to change it.
Do you have to pull credit for
We can do a
them
soft
to?
credit pull. So a
Okay.
soft credit pull would just be one bureau. So it wouldn't affect your credit score in a
Okay.
large manner at all.
And then do you recommend any credit companies for someone who has like not so great credit that they need to like maybe build their credit up a little bit? Are there ways to do that?
Yes, I will say there are a lot of companies that advertise, credit repair for a chunk of money. They'll say, yes, if you pay us $1,000, then we'll help improve your credit. I haven't seen that be overly successful, but if you find a loan officer that you trust in your area, for example, Movement, I know, and I can speak to their process. We can do free credit repair. So what we would have to do is pull credit and then we can get an action plan on how, if we're looking to improve, say 40 to 80 points or 100 points, really what kind of is our target? What do we have to do to get there?
And
So
by that 40 to 100 points, whatever that is, jump up in credit, does that saving you money then on your interest rate and other
yeah,
items? Okay.
yeah, so the better your credit score, the better your financial profile, the lower your interest rate will be. And that said, sometimes it boosts you in, okay, so maybe we have a 580 and we're looking to get to 640 to take advantage of a down payment assistance program. Are we looking a years out? What do we need to do? Or is it a short-term problem that we need to solve? So that's all something that we can work on in-house.
Perfect.
And it's free. So I always suggest, kind of go to one-stop shop, figure
Sure.
out, okay, is there a loan officer that can help me not only set a plan and for a course of action to purchase, but like I said, that kind of gives you the information of, is there something that I need to fix, credit included, and we can do the free in-house credit repair.
What are like one or two things that you see that are a big downfall of like credit mistakes that you see people make? Maybe that they didn't realize, oh, this is really going to ding my credit hard, and they just didn't
Mhm.
realize it. What do you see typically?
I see a lot of young buyers opening credit cards with like Best Buy and all the furniture stores and, just getting credit cards here, there, and everywhere and forgetting about them. It's not uncommon, although might sound silly, that you get to a point where you have so many Target, all of the stores that offer credit cards that we're just not paying them in a timely manner.
Sure.
And it happens more times than not where, okay, yeah, it sounds good to build your credit, but we have to be, very
Responsible.
mindful and careful and responsible because
Yeah.
although it
A
sounds
Target will
great,
get you.
yes, Target does get you, but yeah, the Target cards are, yeah, that seems to be
Yeah.
a little bit of a mistake. And then also, I think just, overspending. Credit cards are a great tool and they have wonderful perks, but I just think, managing it in similar respect to what we were talking about before.
Sure. Sure. Okay, wonderful. Can you give your information, how to get a hold of you?
Yes, yes. My phone number is 908-361-2539. I'm available by text, phone call, and then also email. My email is Elise, Elise dot Paolini, Paolini, at movement.com. So
Awesome.
again, even if it's just a quick chat, we don't want to start the process. We just want to have a few questions. I'm available.
All right.
Happy to
Thank you
help.
so much for your time.
Yeah,
I
thanks for
really
having me,
appreciate it.
Skye.
Of
Thank you so
course.
much.